One of the most well-known brands in India for a long time used to be Eureka Forbes. Ever since I was in college or late in school, there used to be a Eureka Forbes salesman all the time knocking on the door, trying to sell a water purification system. Later, everybody tried to get into the act. Purit and HUL Venture tried its best. Then Kent tried with Kent RO systems with lot of advertisements. Today, water purification is big business. But Eureka Forbes was the first one of the bat. It was originally part of Forbes and Company. Forbes and Company was an old Scottish firm which is in existence in India from 1767. From the Forbes family, the businesses had moved to Campbell's to the Tatas, and finally Tatas had sold Forbes and Company to SP Group, the Pallonji Mistri Group, of which Cyrus Mistri is the most well-known name. Over the period of times, the original Forbes businesses were shut down and several new businesses were started. Nearly 80% of Forbes value is derived from Eureka Forbes, which is very common byword and a very popular brand in India. This was a hugely profitable business, though the business suffered a loss in the last year due to the pandemic. But the business has recovered to show a profit after tax of 52.4 crores. But the Palonji Mistri Group, which made big bets in infrastructure, has been struggling like all infrastructure companies because they have been unable to pay debts. Their solar venture also got into trouble. The Pallonji Mistri Group is an asset-heavy, wealthy group, but very little liquidity. This liquidity pressure has meant that they would have defaulted on commitments to banks, and banks have been putting pressure to recover the money. The Solar Wilson Group was finally sold to settle some dues, but still the debt from the infrastructure business was becoming a millstone around the neck of the group. They desperately needed to sell some crown jewels to get rid of debt. So one of the conditions for the bank to be patient with the loans was that the Mistri brothers would sell Eureka Forbes, and whatever money they got out of it would go to paying off debt. So Eureka Forbes is going to be sold to the Advent Group, which is a PE fund based out of America. They will buy this company and drive the business forward. And both parties have agreed to a method to sell this company. The process is long and complicated. What they are planning to do is first, Eureka Forbes Ltd will be demerged from Forbes India, and the shares would be listed on both the stock exchanges. The SP Group will continue to hold 72.6% of shares in the demerged group. Advent will then come forward and buy the entire stake on a fully diluted base of the S&P Group and will make an open offer for the rest of the stocks that have been listed in the market so as to obey a SEBI ruling which says when a new person buys more than 20% stock, he has to make an open offer. In this case, they will make an open offer for the balance 27.6% of the company. And if the open offer succeeds, they will be forced to take the company private. This will help Advent build value and develop the brand further. Also, the SP Group has come on record to thank the employees and the officers of Eureka Forbes for adding huge value to their business for so long, and they are very sad to let them go. But they say that the new owners will not change much of the employees and the entire team will be retained and they will continue to grow the business. This will mean that there enough liquidity will be infused into Eureka Forbes by the new management to campaign to step up attacks on its brand by Kent RO and improve the brand recall of Eureka Forbes. So what we can expect is that the Eureka Forbes will be listed in the market and the price discovery mechanism will happen. But the company has been valued at 4,400 crores by Advent, and once the listing is done, roughly 72% of shares of the SP Group will be bought by the Advent Money Group PE for a sum of 3,300 crores. So 3,300 crores will directly grow into kitty of SP Group, which will be used to prepay the loan. The dilution from 100% to 72% in case of Eureka Forbes will mean even SP Group will get some more money, and even that will be used to bring down debt. While this may not be enough to clear the entire debt of the SP Group, what it will do is give them a breathing space. This is what is happening to all infrastructure promoters who are in serious trouble. SL Infra is also going through a similar pang. Its owner, Subhash Chandra, had to sell a significant portion of his equity in the flagship Z Entertainment to pay off 85% of his debt. Even after selling 15% of the debt which he took, his remains unpaid, and most of his infrastructure bets have gone wrong. His son Puneet Goenka is facing trouble with the institutional owners, accusing Puneet Goenka of indulging in the corporate governance irregularities, and they have moved a resolution asking for an EGM to vote him out. For now, two independent directors have resigned and the matter is in a limbo. Similarly, S&P Group is also selling its crown jewels to repay its loans. So, most of the chickens have come home to roost and all the infrastructure players have lost a lot of money. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.